welcome to Pro Trader Strategies market commentary for Tuesday, October the 13th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. And I'm going to do the same things for you folks out there, but I'm going to go a little bit further. I'm going to layer on some option strategies that I find based on those guidelines we lay out in our courses that I've created over 25 years of my experience. Remember, back in the day, I didn't have a choice on what strategy I was putting on because I was a market maker. So I've learned from those mistakes, and I'm going to pass them on to you as to how to avoid those pitfalls in order to put on option strategies that are optimal for any given situation. All right, so without further ado, let's get on with the economic data and talk about what we're seeing across the pond. Really not a whole lot of stuff going on. We do have economic sentiment out of Europe, and that came in at 52.3. That is way lower than what was expected at at 72. Also, the German economic sentiment came in at 56, expected to be 74. All right, here in the United States, we got the NFIB, which is the National Federation of Independent Businesses. It's a small business gauge of how their outlook is in the current environment. It came in at 104.0, expected to be 100.9, so better than expected there. Again, above 100, but not, I was not expecting, with some of the economic data that we've been getting, that this small business index might be a little bit of a lagger, especially without anything happening with this stimulus package. Doesn't look like it's going to happen anytime soon. It keeps getting dangled in front of us like a carrot, and the markets kind of accept it, start rallying, and then we start getting some kinks in the armor, and we see some fallback here. Today, we are seeing some strength in the overall dollar, and that is part of those levers and pulleys really causing gold to come off, which we'll talk about here in just a moment. It's also causing the equities to show some weakness as well. But we also got CPI, which is Consumer Price Index, coming in at 2%, expected to be, 0.2%. Make sure I said that correctly. Expected to be 0.2% as well. So in line with expectations. Strip out food and energy, and we've got it coming in line with expectations at 0.2% as well. All right, so that's it for the economic data. Geopolitical environment, we still have this whole stimulus package, like I mentioned, kind of being dangled in front of us and kicking the can down the road. Doesn't look like it's going to happen anytime soon. So let's talk about crude oil. We are seeing some strength here in crude oil, up almost $1, back into the 40 handle, right there at the point of control, which is right around, let's call it $40. Not showing that weakness that we might expect with the strength in the dollar. Remember, this is a dollar denominated product, and that's going to cause some of those levers and pulleys to work in and or against its favor. Today, it's fighting that uphill battle against a strengthening dollar. Whereas we are seeing gold futures really fall out of bed, down $33 on the day, back out of the 1900 handle. I was expecting us to hold on to that 1923 area, but again, we are falling back down as the stimulus package doesn't look like it's anytime soon. So that's giving strength in the overall dollar. Remember, if they do a stimulus package, that'll weaken the dollar, which is going to affect gold futures more so than crude oil. All right, bonds moving higher again today. Had a couple of days in a row where we're starting to trudge back towards that 177 handle. Let's call it 2 points away from it at this point. But weren't able to get above that 200-day moving average yesterday. Today looks like we're getting above that 200-day and the 9-day simple moving average. So showing some strength for the near term, and I think that we should probably climb back up there because we've heard this time and time again that the Fed isn't going to do anything anytime soon. One thing, though, is if we start seeing the Fed come in to support some levels for the bonds and or securities, we could see some movement there as well. And then let's get on with the equities. VIX is moving higher. That's why, because we're seeing the equities come off again today, or come off today. I shouldn't say again. It's been a long time since we've seen a bit of a correction here. Well, down 191 points. Yesterday we had a nice big move to the upside in both the Dow, or in all the Dow, the E-mini S&Ps, and the NASDAQ. Today getting a bit of a correction. Still pretty much an inside day for the most part, as you can see there. But the NASDAQ has a area here that is starting to look like it's getting a little bit toppy. I don't think that we're going to necessarily come down and retrace the entire move here, but really making that head and shoulders kind of thing look pretty good there as we broke through the neckline. We talked about that yesterday. Breaking through that gave upside, but today with the market the way it is, this topping pattern right here, we're going to have to wait to see. That could kind of make us roll over, and maybe we'll start trending in this tight little range. That's a little bit tight. Remember, this is way back in the Wayback Machine from a trend channel, well before all of this stuff happened, and before, you know, 1,000-point day in the Dow Jones was a normalcy, and or you know, several hundred points in the NASDAQ. But market seeming to want to calm down a little bit here. I don't think that we're going to go up there and breach those all-time highs unless we get a stimulus package. Then, of course, I think that that could very well be a thing where we go and test those all-time highs. But at this point, I think that we're going to start looking to consolidate a little bit more. Here we have the E-mini S&Ps off by about 23 points, but nowhere near a big correction as what we were seeing. This is what I was saying when we were mentioning an inside day, and this is a perfect example of an inside day where we have the value area highs, quite a wide swath there because of the market really rallying, a little bit of profit taking into the end of the day. But today, as you can see, overnight and today, just no incentive to go anywhere. Kind of a wait and see type of market at this point. You know, we did get some earnings out of the banks and Johnson & Johnson. I didn't play any of them. The volatility was just not there, so I decided to pass on these. As we can see here, volatility was relatively low, and I was expecting a little bit more, hoping for a little bit more of a upside in volatility. We just didn't get that, and as you can see, there's just no volatility crush afterwards, so I'm happy for that. That I didn't get involved in it. I mean, it was basically 2 percentage points, which is, you know, almost nothing, especially with the correction we're seeing here. Despite the fact that they did come out and beat on earnings, they are, you know, having some difficulty, they said, with the, you know, the vaccine and all of the things around coronavirus, that it's just not going as well as they had anticipated. So that's been, I think, the big driver of this market coming off. And now something to talk about with mainstream media is the fact, Delta Airlines did come off, but I wanted to go to JP Morgan. JP Morgan also came out with their earnings. You know, one of the things that they were talking about on mainstream media today was, if you're in the financials, it would probably behoove you to go in, especially in a day like today with JP Morgan, and start working on some covered calls if you are long the bank sectors, because they're probably not really going to go anywhere, and they haven't gone anywhere at all as of recently. Now, one of the things that they were talking about was selling these 105 calls right here. To me, that's a little bit aggressive, all right? Yeah, it has stayed within that range. It has showed resistance up there at that value area high. You know, and this setup here is not probably a very good Fibonacci. So let's just remove that old drawing. We probably throw up a new one. I think it's going to be lined up on, I'll just set it up as a Fibonacci like this. That's just basically the same type of Fibonacci there. But one of the things is really this value area high has showed resistance. Time and volume has been spent right there at around $100. So the idea here is, while it's trading right here around $100, they mentioned going out there and selling those 105 calls. Like I said, that's a little bit aggressive in my eyes. I would be more inclined to go with something a little bit higher, and you know, the deltas in line with what I talk about in my daily market, or sorry, in these webinars, and probably going out to that 110 strike. And as you can see here with that Fibonacci, you know, that 110 strike is just above this Fibonacci as well, the 50 Fibonacci. Value area high, it's going to be a little bit of a weak area. Yes, it is right there around that 200-day simple moving average, and that could show some resistance there. But again, I like to deal with the probabilities, and selling that 105 strike is about a 36 delta, which means it's about a 36% chance of being 1 penny in the money. That's a little bit too much for me. I'd like to go out a little bit further. I usually like to kind of go at around the 16-ish delta that I talk about in my webinars. And with that being said, I'd probably pick the 110 calls instead. Yes, it's about $1 less than what you would get for those 105s, but I'm talking about probabilities here. That would lower your overall cost basis. Also, think about it this way. They pay a pretty darn good dividend. That's why a lot of us have JP Morgan in our portfolios for that nice big dividend. Well, think about it this way. I've talked about it time and time again. You'd be collecting another $1.10 every month for doing some covered calls on this trade. And as you can see, it wanting to trend sideways here, probably for the foreseeable future as well, as interest rates aren't going to go higher. That's a headwind for the banks. Good opportunity to be doing some covered calls. And here in FA, it gets called away from you at those levels. Then you go in and start looking to sell some puts at good strike location and buy that stock back and play it that way, back and forth, lower your overall cost basis over time, and you'll be happy that you did that, patting yourself on the shoulder. But pretty funny they were talking about that. I think they must be watching my daily market commentaries, because I've been mentioning that for quite some time. Their strike location, a little bit more aggressive than what I would do. I think that those have too high of a probability of getting called away, especially if you're worried about capital gains or something like that. You don't necessarily want that called away from you, but you want to lower your overall cost basis. We talked about that in those webinars there. In that case, you'd probably be looking at the 115 calls to do that covered call. That's about an 11 delta. So 1 in 10 chance of getting hit on that strike is a pretty good probability for you to just collect premium on that underlying you own. All right, so that's about it. Like I said, I didn't play any of these overnight for the earnings today. The reason why is there's just not a whole lot of volatility involved in those. I'm also want to see a couple of these, how they're playing out. Like I saw Johnson & Johnson beat on earnings, but kind of come off a little bit. I want to somewhat avoid that. We could be going into an earnings season where we're seeing a lot of bearish or bullishness ahead of those earnings. And once the earnings come out, there's a little bit of disappointment. So all of those things coming together, I just decided to pass on these. And that's about it, you guys. We do have a webinar coming up this week, so check it out. It's the Roadmap to Trading Options. We're going to be talking about detailed guidelines that you can follow in order to implement these option strategies according to your assumption and your risk parameters. So make sure that you go over that, know your risk parameters, know what we're getting involved in here, and that there are risks involved in trading, not even just options. So please take a moment to go over the disclaimer wherever it is here, and that's all I got for you guys, other than if you can't take that, take it easy.